Hello, 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 everyone. Good morning. Happy Thursday. Day before OPEX tomorrow. Jobless Claims Thursday. So, market selling off again overnight. S&P trading against that 50% harmonic level. And with that, good morning, Patrick. Good morning, Options 22. Good morning, our Martinez. Good morning, CD. Grand Rising, Christoph. Question, you mentioned the OPEX is tomorrow and Gamma is printed to 4,000 base. Well, that's where the big open interest is, and that's where the Gamma wall is. Based on what happened the last 2 months on OPEX, is there a high probability that we go to the pinned target? Not necessarily. You can't, I just wouldn't put on a trade saying, hey, we're going to revisit 4. We're in negative Gamma mode right now. Okay, and we've already broken that key 4,000. Unless there's something that triggers a snapback or some kind of pattern, I just wouldn't bet on anything going into OPEX. A pin is an option, and it doesn't even have to get to 4,000 because we're in negative Gamma territory. So, and you can't make short-term conclusions from the last 2 months. Good morning, Jacob. Howdy, Happy Jack. Good morning, George. Thoughts on TLT? Was just a long-term Treasury ETF. Good afternoon. And you had yields. Well, yields are reversing a little today, the 10-year. And the TLT is based off the 20-year and up. But the 10-year is getting a little pullback today. We'll get to that in a second. So, this morning, Philadelphia Fed Manufacturing Index still solidly in contraction, but better than previous and better than consensus and forecast. Initial jobless claims coming in much better than forecast and consensus, below that 200K mark. So for the people watching the jobless market, especially initial claims, that holding up. Continuing claims a little higher than prior, but still below consensus, a little higher than forecast. Philly Fed business conditions higher than forecast. Employment higher, well higher than forecast. New orders not as bad as forecast, and prices paid. Forecast 24 coming in at 24.5, so better than previous, but slightly higher than forecast. We got Collins speaking. We've had a lot of Fed speak. Collins speaking. I guess that's now. We got the EIA numbers for crude. Remember, double bottom confirmed but not triggered. Then we got Brainerd and Williams speaking today. Williams not till after the close. Tomorrow, remember, the big thing is the OPEX for January. So far, pretty red market today. P&G released earnings. They beat, but I didn't tear into it that much, but huge gap down back below the 200 on P&G today. Pretty much watching to see if we get some support coming in here. But so far, semis pulling back very nicely, except for Qualcomm that's up on the day. You see here with the sectors, pretty much everything is red. Utilities holding up the best, but everything is red going into the open. Fed watch 95% for that. For the 25 basis points in under 2 weeks now, and still barely hanging on to greed mode. Gamma. So we have some pop-up gamma from these short-term options. You can see here the gamma flip roughly. This is why you have to pay so much attention to it closely. Gamma flip is about 39.63 level. We're trading 39.16, so that takes into positive gamma. So to now elaborate a little more, yeah, you still have the huge both put and call gamma at 4,000. But at this point, right around 30, there's some decent gamma on the put side, right around this 39.25 area, 39.25 area, and then 39.50s have kicked into a minor extent. So you've had in the last day, you've had a fair amount of options being shorter term options being put on. So that's where I just wouldn't count on the rally. And also, you get back above this 39.63 area, it dampens the effect of the rally, which that can even get steeper going into OpX tomorrow. So there's going to be headwinds now, substantial headwinds to get back to 4K. Not saying it can't happen, but you just can't say, "Oh, we'll pin it at 4K, so I better buy some calls or something, or put on a call spread, or buy the futures." Nope. You know, if there's a pattern, that's playable. But based off the way this is now structured going into OpX, you could get an acceleration, you know, back to that positive gamma area, but that's well before the 4K. As I talked about, P&G gap, pretty decent gap down today. Netflix after the close. That's going to be the big one after the close. So, where do we sit? Good morning, John. Good morning, Donald. Hey, Sterling. Yeah, I saw that from JP Morgan. Good morning, Onisa. Yeah, that's going to be interesting that they must face customers' lawsuit, alleged hid trading costs. That's going to be very interesting. So, here's what I was talking about with that sort of that title from the live stream. Trading against this 50% harmonic area. That's this blue line right here. That's from this little run up from the lows on the 22nd of December to the highs a couple days ago. Remember, I'm watching for a bounce between this 39.12 area and 38.81. Another key area to focus on is about 38.96 to 3900 should we break below this 39.12 area. So I'm watching for some potential support coming in here, going especially into tomorrow. If we could really break down with momentum and close below 38.81, then I'm targeting the lows from the Christmas week to New Year's week back in, not the lows yet from October, the lows from right around the holidays. That's it. That's it. We do not have a substantial bottoming pattern yet. We don't have one going into the open. I'll be paying attention. We have some clear path moves. So on the shorter term stuff, like if we get above this 1 hour rotation zone, we could easily retrace to a little higher price action. And I'm going to be bumping up this level now to about 39.40. That will be my price. If we do get some bouncing into the opening, that's going to be a key short-term target area. Again, if we sell off, we got 3900 to 3896 as the next key area, and then majors 3881. If there's something that snaps back, it's got a lot of now work to do, but the next level I'd be focusing on is about 3950 to 3952 on any bigger rally. On the NASDAQ, trading only at the 37.5 harmonic after coming back to the rotation zone. And again, with all the algos that buy in the areas of these 2021 EMAs, they did that little buying kicking in. That's why it doesn't mean it has to hold. Always watch for that little kick in from some of those algos that magically buy those levels. Also trading against a key prior resistance becoming tested support area. So we break down below about 11,344. My next target is 11,255. Not only is that just behind this little clear path remaining area, it's the 50% harmonic from the run up. On the bounce, I'm paying attention to that 1 hour rotation zone. Why? Again, we have a clear path move. And my first primary target to utilize would be 11,450 area. Above 11,450, I would be watching the 4-hour rotation zone, which is the bottom coming in about 11,482. Again, the major support 11,255. And then the thing that doesn't tip me overly, now if we, and I'm not saying this will happen today, but over the next few days, 11,129 on a closing basis. The Dow, which is pretty much back in its trading range, right in here from Christmas and New Year's week, right back in there. Oh, so 32,900 is key support. Resistance is 33,640 area, 33,600 to 33,640. We don't need to dwell on that anymore right now. If we do start breaking, though, below this 32,750 area, quick target, which will be a very strong magnet, and not necessarily just for today. That's something I'm watching over the next couple days. 32,400 right at the flat 200 and this little prior support shelf. So that's going to be a very interesting target should we break the holiday week support. Russell still holding up the best into the rotation zone. So if it breaks down below today's lows, this is where I will start watching for about the 1830 level. 1830 with the 200 and the bottom of the rotation zone for all those Russell traders. Other than that, paying attention again to the 1-hour rotation zone, and the first primary target area will be roughly about 1859 and a half, 1860. Should we start breaking into the rotation zone? Good morning, Connor. Good morning, PMG. Good morning, Anissa, if I didn't say that already. All right. Let's get to the spiders and the Qs. Again, on any bounce will be to at least a partial gap fill play, trading 388.65 pre-market. My first level, though, besides using the gap harmonics, my first key level will be about this 390.30 area. That's pretty big support becoming resistance again. And then it would be for on a stronger rally, 391.49. We start breaking down even more. My major support still 386.45 to 386.50. Keep in mind, we have daily cycles rolling over, and we are still a long way from oversold. On a bunch of, I didn't talk about it in the S&P, the futures, but we're essentially trading the same pattern. For the Qs, looking to open around 275.75 area. 276.35, 276.40 will be a primary target on any rally into the open, well before the gap fill, and then the gap fills to 277.88. The key support, let me flip this at this point. Oops. Let me take off a couple of these levels here and flip this. The key support below 275 is about 274.75 to about 274.50. And we break below that, it's not until 272.21. So those are everything I'm utilizing on the Qs. We got DAX finally getting the rollover back to that 15K target. If we start breaking down below that, next target is about 14,875, and then major support coming in around 14,750 area. The notes, which we rallied yesterday, little pullback. We hit the harmonic. 106.07 and a half. I think we got to 106.08 and a little pullback and reconnecting the target with the 200. If we start rallying above this 116.08, I'm targeting closer to 117, but we have major support coming back in 115.07 to about 115.12. So there's not any great, besides very short-term setups, there's nothing great going on yet in the notes. Asked about the TLT, which is the 20 plus years, so the 20-year and 30 years. Coming in, this is a very key topping area you see from the TLTs between the 50 and the 62. The only thing that would get me in the shorter term more aggressively for another rally is a close above not only the 62.5 and for the 200. And then the next key target would be 113.48. I am watching for potentially a short-term key topping pattern in here. Dollar index still watching for a potential long, a little more medium bottoming term pattern being put in, but nothing more substantial and not a great tradable pattern just yet. Unless we can get a close back above 102.40. But there is a fair amount of buying pressure coming in here so far on the dollar index. So sterling brought up the VIX. Still, it's There is just, it's in this low volatility area. I'll start to get more interested in the VIX if it can get back above 23. Crude, again, confirmed but not triggered. Cycle still at the top, still hovering at overbought. Coming back to the rotation zone and getting a bounce here. The only thing I'm still watching for is the confirmation on a closing basis back above 81.50. Keep in mind, we have the EIA numbers today. So don't blindly go into crude without watching those numbers, especially with cycles at the top. I'd really like another substantial pullback. Well, at least a more significant pullback before making a run at this double. But that's just my personal preference. Can't trade personal preferences. Gold, still holding up, still watching for a long-term topping formation to get put in. So, but that's about it. Nothing substantial yet there. What else? Let me get to the other currencies. The yen, I'm keeping an eye. There's a fair amount of buying support here. So unless we get some solid momentum, I'm actually watching for another pop higher before a rollover play in the yen. Euro, still watching up here right around this 108.80 level for key resistance. If we do get above that, it's just a quick little scalpy thing to what about 109.40. There's not a fantastic setup unless we... from a bullish dollar perspective, if that holds up and the euro starts breaking down below about 107.70, there could be an interesting little trade back to 107. Bitcoin, still trading in this high range. Tesla, which was targeting at least a slight gap down. Not real interested on the shorts. There's a minor thing to this gap fill, about 122.40 if the markets roll over. The key level is this 126, and it's trading 126.72. We start breaking down below about 126. There could be an interesting little gap fill play here. Other than that, there would be the magnet back to the close about 128.78. There's just not a fantastic setup right now with cycles at the top coming out of overbought in the short term with Tesla. Okay, Charles. So you're waiting also. I think that's a smart play in crude. We'll get some more great plays in crude. What about this? Yesterday in the Russell, those 15-minute momentum bars that paused at noon gave me a chance to sell micro contracts for the secondary dump. Sold 1880 and covered 1860. Yeah, I was going to say 1865. You sold at 1665. You might be retiring. Have you bought back at 1665, which was just below Friday's low? So you spotting the momentum bars, using some of the momentum strategy. Good job there. All right. With that, here we'll just peek in at Procter Gamble. This is what I'm talking about. Trading the 200 is back at 144.50. If the market does stabilize, I'll be watching for a quick little potential, at least partial gap fill in this before another rollover play, but I'll be watching where it closes in relation to that 200. Again, they did beat, but I did not see any guidance they gave or any other news. I have to start looking at that after the opening dies down. So, Christoph wants NVIDIA. You're holding your NVIDIA puts. I mean, your key support, I'd be watching at this point back to around 163.50 to 163 for the key support. If it breaks back down, especially below where it's trading, if it starts breaking back down below about 169.50, I'd watch for that return to that 200 if the market has weakness over the next couple days. Going into OpEx, that would be some key support area in the short term. Still just barely coming out of overbought cycles at the top. All right, with that, I'm jumping into the open. And Jacob's done with football. No Super Bowl for you this year, Jacob? All right, I'll see everybody after the close. Bob should be on after the close, so we'll get his thoughts on anything going on and have a good trading day. Again, if you don't have any good setups, don't force it going into OpEx tomorrow, and next week really gets into the meat of earnings. You can see some good volatility next week. Talk to everyone later. Bye for now.